Hello, my dear viewers. After a long time, uh, you're watching Forex Trading with Rakesh on your favorite YouTube channel, that is Dukas Copy Academy. Today is 2nd of September 2024. The day is Monday. Although this is the first trading day of the week as well as the month, but this is also a half day. Like, okay, so Victor Olagunju. Hello, Victor. May I know, Victor, where are you from? So that we can have a little interactive session. Now, earlier we used to do this program where we used to have the conversation about the key points of inflection from where the prices can reverse. And with the new opening or with the new start in the September, I wanted to make it more useful for my viewers where I'm thinking of planning and executing the trades within 1 hour where I tell you my plan and execute it on screen. The problem with this is that I'm not um, I'm not a certified advisor, so I cannot advise you to use my ideas or to use my trades. But still, I can do it for entertainment purpose, and I'll be using the disclaimers for that. So the idea is that I'll be placing the trades and I'll be planning the trades within that 1 hour gap. For that, I will have to change the timings because right now it is lunchtime, and placing the trades during lunchtime is not a very good idea. So I think we'll shift this with the help of the moderators of the channel. We'll try to shift the time so that we can trade live when the market is active. And I also would like to take suggestions from my viewers that if they would like to trade in the forex market, or they would like to trade in the commodities or in the futures market, or in the mix of anything that they want. Okay, so as long as my viewers are happy with forex, I will continue with forex. If they want to uh, shift to crude oil or the gold, then we'll shift there. And I'm very happy with the futures also. So when I say futures, I mean commodity futures and the index futures like Dow, Nasdaq, and the E-mini S&P. So those who don't know me, my name is Rakesh. I'm your host here. You might be thinking that I'm linked with Dukas Copy Academy or Dukas Copy Bank, but no, I'm just using their YouTube channel to showcase my own analysis. And I have no affiliation with the Dukas Copy Bank, and I'm not their employee also. So therefore, all the trading ideas that I'm going to create or analyze here, they are of my own. It has nothing to do with the Dukas Copy Bank. Okay, and in this section we'll only be using the price for dictating our plan. We will not be using any type of news or events around the world because we know that everything is already in the chart, so we'll only focus on the charts. Now today there is a new start, so I'll be picking up a few. Before I start, I must take you through the standard risk disclaimer, so please read it, understand it, and then only continue to the charts. You can pause the video here before getting on to the next section, which is the charts. So right now what you can see on your screen is the monthly chart of the dollar index, and this is the J Forex platform. You might be knowing that Dukas Copy has the proprietary platform, that is Dukas Copy J Forex. It's a very nice platform. It has almost all the features that a good trading platform should have. Okay, so rather than going into the trading platform's features, we'll see what we are going to do. Say if we select a market, say if we select say USD JPY, and we want to pull it up from here, US dollar against the Japanese yen. We do a top-down analysis in the dollar yen, and thereafter we'll see how we can. Okay, I think from the last month, my friends who were with me, they know that we were looking for the bearish price action in this one up to 143. In fact, we did went to 141.67, although anyways, so monthly price action was like this, and then it closed last month here. Yesterday only, on I mean this day only, it has started here and has started going up. Now those of my friends who were okay, so I'll be using somewhere at different places, I'll be using the ICT concepts, okay, for I'll be using the ICT concepts to explain what I'm expecting here. And Victor, if you are familiar with the concepts, please let me know in the chat, and we'll have to adjust few things on the chart so that okay, high-low label we want it. We want drawings, indicators, alerts. We don't want tooltips, and we don't want pending positions and everything. That's it. So why it is here? I don't know what is it. So just remove it. Just remove it also, and we'll remove this also. Okay, something is here. So what is it? Rectangle is there, Fibonacci is there. All right, so we have get rid of everything. What I was trying to say here is that we'll have a look at the dollar index, because we want, if we want to talk about the US dollar against the yen, then we have to check. If we want to talk about the US dollar yen, then we have to talk about the dollar index. So collectively, where the dollar index is going in the few months or in the few days. Now, we know that the price tends to move towards the imbalance. This is an imbalance in the monthly chart. The price tends to go to and go away from this imbalance. Multiple times it has happened. And if the price has shown some imbalance during any move, it tends to keep moving in the same direction. Okay, now from here we see that on the monthly chart, the US dollar index was going down, was supported by this imbalance, or you can say fair value gap in the terms of ICT. And then it takes the liquidity above these equal highs here, drops again into this time it gets a little deeper into this gap, okay, but eventually was able to go higher, failed to go higher than these previous highs, or I will say it it traded this order block and then went lower again into this time again it will try to go higher. So what we are expecting in this, we are expecting it to at least go to this order block. That's it. We don't trade on the basis of the monthly candle, but we just have an idea that the last month US dollar index has traded the monthly fair value gap, and it did not close inside that. Eventually it popped up from there and is trying to go higher now. So we are expecting the US dollar index to rise. Now when we switch to the weekly, we'll have maybe a different perspective on that. So the price went lower, closed inside, very next week it came out, but it gave us a fair value gap on the way down. So when it went down, it gave us a fair value gap. If this fair value gap fails to push the prices lower, then we can expect this gap to act as a support on the way up. So what we will have to do, we'll have to wait for 1 week to check if this fair value gap on the weekly is able to push the prices higher or not. Now this is one perspective, okay. This is one perspective, and when we switch to the daily, we'll see, I'm just going to remove this and this one also. You see the day on the daily, the price is making lower highs and lower lows, but here this high was taken out by this high. So can this be taken as a market structure shift? Yes, this can be taken as a market structure shift if the price has given us a fair value gap then this fair value gap can be seen as a buying opportunity. Like this can be inversed. Okay, this is one thing. Second is on the way up, it gave us another fair value gap. So you can also expect the price to drop into this and then rise like this. This is also expected. All right, I hope you're getting what I'm saying. Till now we are on the daily, but we have to frame our trades on the 15-minute or 1 minute. So what we're going to do, we'll leave it just like that, and we'll label this as daily fair value gap. All right, so because this is bullish, so we will leave it in with the green color. Okay, like this. All right, the big, we don't want the foreground color. All right, and this is good, and we save this template as bullish fair value gap. All right, we save it. All right, we have saved it. So this is daily fair value gap, and when we switch it to, so now we are just looking for the supporting ideas that are supporting the price to go up, because it has traded a higher time frame PD array. This is premium discount array. This one is a higher time frame, that is daily bullish fair value gap, and the price has traded this. So not daily, sorry, monthly. I think it was monthly or weekly. So yes, it was monthly, right? So it has come into the monthly fair value gap. Thereafter, on the daily, it has given us another daily fair value gap. That means the dollar index is going to rise, but it has taken this liquidity. So now we switch to 1 hour. See, we are not switching to 4 hour. Why? We are not going to use the 4 hour. Okay, on the 1 hour, what do we see? On the 1 hour, we see that the price has started going higher. Okay, and these two highs, we'll mark this. These two highs, after taken out, they are trying to act as a support. You know, when the support is good, it's okay, the price may continue up. But what my expectation is that this daily fair value gap that has been created, the price will try to trade that and then go higher. This is just my expectation, but it need not to come true. Okay, this is just my expectation. The price can continue higher from here only, because on the 1 hour you see there is a fair value gap in here also. But will this act as a uh, support? I don't think so, because price has just taken this liquidity. Now if it has taken the external liquidity, it will go for internal liquidity. Where is it resting? Either in this fair value gap or below this low. Why below this low? Because these are equal lows here, and also this is a daily fair value gap. So the price needs to, I think, I believe, go to this area and then go higher. So what does it mean? Can we frame our trade based on the daily? Yes, we can, but let's look if we can have something on the 15-minute time frame. Now till now, we don't have anything that is supporting an idea for us to go down. But if this is, you see this is the hourly fair value gap. If for some reason the price drops below this and closes below this hourly fair value gap, and then go and test this as a resistance, then we can target this. So in this case, what will happen? Where is the position tool, guys? Where is the position tool? I forgot. Risk to reward. Okay, so if we sell here, all right, and we take profit here at the beginning of this, oh my god, what is this? How to change it? I don't know how to use up and down. Come on. All right. I think risk to reward I should be able to calculate. Why I am not able to calculate this? Ah, okay, like this. All right. So this is not like the trading view, but yes, you got the idea. So here our risk, if we sell it here, our risk will be somewhere. We will have. I will tell you in my future webinars how I will place trades and how I will target. But eventually, you can see if I am placing my trade here, okay, and I'm risking this much, you can see that my potential target will be always more than 3 times. I'm not saying that you have to maintain it more than 3 times, but it will be. You will see eventually, okay? You will see that eventually it will be more than 3 times. Like this. 1, 2, 3. So it will be 4 or 5 times. So what my idea is that this is a very good way of trading, but if you know beforehand what you are looking for. Right now, what I'm looking for, actually, I'm looking for a long trade, but I know that there is a possibility of getting a short entry to this place like 101.14. So will I be looking for a short entry? Yes, I will be looking for short entry, but only if the price goes below this rectangle. Now, what is this rectangle? This is 1 hour fair value gap. Okay, this is it. When the price goes below this, then only I will be able to sell the dollar index. Now, I don't want to sell the dollar index, but I want to short the US dollar against the yen. Is it doing the same thing? Let's see. Let's see. On the monthly, on the way up, I don't see any fair value gap. Here in this run either, I don't find any fair value gap. But yes, I find on the way down, I find a monthly fair value gap. All right. So this is a monthly fair value gap. All right. Now, what is this? All right. And when we switch to the weekly, we are currently only talking about the fair value gap. When we switch to weekly, we see that not only we have, okay, we don't have any fair value gap after this. This was the fair value gap, but it has already been traded. So there's no point in making it now. But if you make it and you turn it to the red color, I think red, okay. So you will know that if the price tends to or price to go here, it will get rejected because of the bearish nature of this gap. Okay. So if the price goes in again, it will be rejected. Now the problem here is that, okay, we have, where is the next level of support, potential support? If you carefully see on this weekly, there is one bullish fair value gap here. Now this bullish fair value gap will try to support the price when the price dips into it, just like this. Here you can see that it has happened. Okay, if you see what is the low of this particular candle, if you have a look at here, 128.61, so this is the low at 143.419, and this is a low at 143.44, 143.41. So the price just went very close to that and then got support, went higher. Okay, uh, here we can clearly see that after taking out these lows or after trading this once, next time the price does not want to trade it and is still bullish. This is based on the 1 week, and here we have a weekly bearish fair value gap. So because it is a part of the last fair value gap here, so we'll just maintain it like this, and that is acting as a rejection. Now if we switch to the daily, from this leg to here, we'll see there are multiple fair value gaps. One, okay, and then after this leg, in this leg there is one here, okay, and second one is here. All right, we have two fair value gaps. One was traded, price went higher, got rejected, again came back. Now this looks like as if the price tried to go higher and got rejected, but where it got rejected, man, where it got rejected, that's a question. It looks like it got rejected nowhere. Yes or no? It doesn't look like it got rejected at any fair value gap, but yes, it got rejected at this fair value gap. This one. So this one. See, it just traded this and then got rejected, but I'm not keeping it here. I will show you that something that must be there on the 1 hour here. So here we have this order block. I think order block we should not talk about, but still just to give you an idea. Okay, forget it. It will be very complicated if I just talk about that. Just remember now that the price on monthly started going lower, and then we started looking for the low trading ideas. Right now from the daily, we see that the price went higher, sufficiently higher, even higher than this swing high, and now it is trading lower highs and lower lows, then eventually came to this bullish fair value gap. This is bullish, guys, so it should be green. Okay, the price came into this bullish fair value gap and has traded higher than at least this high. All right, now this is on the daily. If I switch it to 1 hour, it is very clean. It is very clean. You can clearly come to know that initially the price was going lower highs and lower lows, then it started making higher highs. At least here it gave a market structure shift. After giving this market structure shift, you can clearly see that the price is making higher highs and higher lows. Okay, now what do we need for us to become buyers? Again, going to the daily time frame, we are expecting a rejection from this daily candle. Okay, and not only this, I will just remove this one now for just some time, because we have another fair value gap here which will be bearish in nature here. So where the price meets this area here, when the price meets this fair value gap, it will try to push the price lower. And we go to 1 hour, we know that this is a daily fair value gap. Okay, so when the price goes here into it like this, it will get rejected because this is a daily higher time frame PDRA, higher time frame than the 1 hour at least, so it will try to push the prices lower. So what we will do, will we sell this market? Well, that is your own wish. I will not recommend that, but I will try to buy it back at another daily fair value gap. Now where is that, guys? Look at this, look at this. Okay, I'm just showing you where is that. So this is my area where I'll be looking for the buying opportunity. Why? Why? Because we have shifted the market structure. After shifting market structure, first reaction is here at the daily fair value gap. Then if the price is able to take support here in this daily fair value gap, we will be looking for the higher prices, and this continuation may be, maybe this continuation may continue till 161 also, but our minimum target will be these highs. I hope you have got this part at least. Have you got this part? Anybody? Please let me know. This is how we are going to frame this US dollar yen buy trade in the coming week. Okay, I mean in this week. Now in this week we have also NFP. So our trades will be based on 1 hour to 15 minute to 1 minute also. The idea is that we wait for the price to behave in some manner here, which I'm expecting to be like this. Okay, you can look for the shorting opportunity in that area, but you cannot hold your trade below this upper portion of the green line. So if I have to frame my trade, I will also be framing the levels now. So 145.77 is the area where you should be looking for the buying opportunities. And if you're looking for a short, this should be a your trade setup. Now eventually you will get a fair value gap here. Oh my god, what happened? All right, so you will get a fair value gap here, and after the price makes the fair value gap in this leg down, you would want to sell this at the retest, and your stop loss will be higher than that fair value gap after the price starts moving down. All right, initially your stop loss will be higher than this high. All right, when the price breaks this low, your stop loss will come to this high. So this is the trade plan. Now this is based on the 1 hour, but if you go to 15 minutes, you can even minimize your stops here. In that case, now like you see here on the 15 minute, the price is making lower highs and lower lows here. You can clearly see that, but there is no displacement here. Like this, there is a displacement. There should be displacement to the downside. So what I'm expecting here is, I'm expecting the price to go higher and get displaced from here like this. All right, I'm just removing on the daily, sorry, the 1 hour. So you will get a displacement like this. That means the previous low will be broken like this. When the previous low gets broken, when the previous low is broken, okay, like here, this place, this is called market structure shift. Now when the market structure shifts in this process, in this leg down, this will be so fast, like this juk, 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 juk. This will be so fast that it will create a fair value gap somewhere here. All right, when it does so, we would want the price to go back into this as soon as possible after the market structure shift, and then get rejected at the lower portion of this fair value gap. We don't want the price to go higher than the half of it. Okay, we don't want the price to go more than half of it. We want it to get rejected at the lower portion, or in fact, if we have candles here, okay, these will be bear candles, and you will see that these will be bear candles. All right, this is difficult, I understand now. So when you see that there is a wick here, and then you see that there is a wick here, all right, and you measure, okay, there is a fair value gap here and here, all right. Now as soon as this candle closes, this one candle closes, the next candle appears, you keep a limit order above the high of this candle. That means as soon as the price enters this fair value gap, you should be in a trade with a stop higher than the candle that has just made created the fair value gap, okay, which has displaced lower to create that fair value gap. So this is how it is made. I hope that I've made you understood what I am going to do in the next few days, and we'll be doing this in the live markets. I would request my moderators to change my timings so that we can have the Eastern time from 10 a.m. to 11 a.m. for working. Right now, I suppose the time is right. Okay, I think we have to move it 1 hour back. So we'll do that. Don't worry about that. So I hope you got the idea what we are going to do here in the next few days. And my request will be do not copy my trade. Rather than copying my trade, try to learn how I'm going to apply this to my account. And this is just a small account equity that I have added $50. It will only be to give you an idea how I'm trading, okay. This does not mean that you put $50 in your account and start trading. No, uh, I have just added a small money amount just to show you the executions, okay, and how you can be profitable with the risk to reward ratio of more than 3 per trade, okay. I think that's all from my side. I am not going to open any trade today. And eventually you will see that we are also trading the 1 minute candles, and we are trading them very nicely. So that's all guys from my side. If you have any questions, please feel free to ask me. We are live now, and I think we will also change the name of the program to let's trade dollar. What do you say? If we have any particular request of trading any other currency pair or any commodity or even future or index future, I'll be very happy to do that also. But if we stick to, I think, one pair in the beginning, then I think we will have a more focused approach towards learning and execution. What do you say, Victor? Are you still there? Kindly include Bitcoin. Ah, you want to check with Bitcoin? Um, yeah, Bitcoin. Okay, Bitcoin. Let's do this then. We will include Bitcoin also. Bitcoin is very volatile, very, very volatile. But why would you want to trade the Bitcoins? We have been analyzing Bitcoins, and I don't want to, boast about it, but our levels on the Bitcoins were amazing while we were talking about the Bitcoin. Anyways, now I stopped talking about that. I don't know why. Last time when I saw that we had tested 49,000 level intraday, and thereafter I stopped watching Bitcoin. Although we were expecting the market to go down. Okay, yes, this is the one, I think, last month. So these are our levels that we had suggested. I'll directly go to the daily. So this is what we were expecting, 50,578. It made it intraday, and then okay. But now this approach I'm canceling out, guys. See here, we were looking for this fair value gap. Boom. But anyway, forget this also. I'm canceling all the levels. So because this trading will now be based on 15 minute and mostly 1 hour or 15 minute or 1 minute. So my request is that Victor, if you can stay away from the Bitcoin for some time, because Bitcoin you cannot trade the way we are going to trade. And yes, the same approach can be applied to the Bitcoin on the higher time frames, 1 hour, 2 hour, 4 hour, daily. Same approach, because the price is fractal, everything works on every time frame. But in 15 minutes or 1 minute when we try to trade, I think you will not be able to scalp on it, because the spreads must be higher on the Bitcoin. Just my opinion. This is breakaway gap. Gap, and the price never returned to these. So even if the price goes higher now, I think these two levels or these two fair value gaps will be sending it down again based on the daily candles I'm talking about. Now, if you switch to 1 hour, you will see that something like this is already happening. I'm just going to frame something in front of you, and then you will say, oh, I never thought like that. Okay, you see that the price was here, the price was making lower highs and lower lows till this point. Thereafter, it started making higher highs and higher lows. Okay, and after this rejection from this I don't know which fair value gap, maybe on daily, it started making lower highs and lower lows. Okay, again, then it made a high which went into this fair value gap and made a lower low. Then it went to this high. Okay, forget it. I'll just, this is the old approach. Now you learn this approach. Okay, in this displacement, like, it made two fair value gaps. Okay, one is this one, come on, one is this one, and the other one is this one. This is called, the first one is called the breakaway gap, the other one is called the entry fair value gap. The price, when it came into this again, you entered here and boom, this is your target liquidity. Actually, this is your partials, this is your target. Thereafter, when it again went to this fair value gap, you see how it is behaving. Okay, after the liquidity is taken, you do not enter a trade in the direction, of the liquidity taken. No, you want to see where is the next liquidity. Now you might be thinking, okay, it is going to trade this fair value gap. Yes, it came in. Then you might be thinking, okay, it is going above this high, but no, there's no value. This fair value gap is already, so it started making liquidity there, took this liquidity again, and boom, down a little. Thereafter, it started making liquidity, boom, took this liquidity and again down. So like this, it was making liquidity, taking liquidity, and down, 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 all the way to this. Now finally it has broken the market structure to the upside. Now this is the Bitcoin. Okay, on the 1 hour, you see this carefully, the price came down, took this liquidity. Now if you go to the left, I think something, all right, so where is my P? Okay, can you see this red candle here? This is known as the order block. When the price closes above that, it becomes an order block. The price comes to this level, boom. Okay, so something like that happened here. The price came to this level and has shown some strength here. Now before this happened, the price had this high, so I'm just creating that high again right in front of you. That high was taken with a shallow run, but to go to take that high, the price had to break this high. Hmm. Okay, Victor, I'm sorry, there was some problem with my power supply. So now it's okay. Now I think you can see that. So what I was talking about here is that even if the price tries to go, okay, I'll say that this previous high was taken by a shallow run, and if the price drops from here, it will find support at this fair value gap. This is my expectation. And this is not only the fair value gap. Also notice that after the price traded these high, these what you call this order block, these two consecutive candles down, this is called order block, and this was also, this will also be traded in case the price somehow drops from here to here. It will have two things done. One, it will be trading this order block, which is very essential, and one is that it will be trading this fair value gap. Okay, so two things at a time, and the price will shoot like this. This is what my expectation is in the Bitcoin. Okay, but even if it happens, you have this bearish fair value gap from the higher time frame. So this will be your target. Your price cannot go higher than this. This is the problem. Okay, now it can go higher, but if you're buying here, your stop loss should be here and your take profit should be here minimum. Okay, you can target for the higher profit target levels, but there's a chance that these levels will block the price from going higher, just like this one. So you don't want to continue higher. Okay, I hope you get it. Now you want to buy or sell, that is your wish, but be aware that at least on the 1 hour the market structure has shifted to the upside. And if you want to go even further down to the 15 minutes, let's see what is happening on the 15 minutes. On the 15 minutes, there is a clear buying. There's a clear buying. You see, the price went higher, went lower, took this sell side, gave a market structure shift above this, the fair value gap, entered the fair value gap, boom, higher. Gave another fair value gap, price came to this fair value gap again, boom, higher. Gave a fair value gap, but this time it failed. So yes, this this buy side, after taking, the price is trying to sell off. Now, even if it sells off, this fair value gap, which is the entry fair value gap or the first fair value gap, should start spooling the prices higher. This is what my expectation is. Now, let's see how the things unfold in this week. And I think if you are here tomorrow again, we'll try to place some trades, not in the Bitcoin, because my account is very small and I'll not be able to scalp on the Bitcoin, but we'll be able to do that on the USD JPY. And you will see that the same concepts you can apply to any markets that you want to see. Any market. You see here, when the price came from the higher time frame, I mean from higher things to the downside to the higher time frame PDRA, and when there was a market structure shift, there was a fair value gap, the price trades to that fair value gap, boom, there's the fair value gap, the price trades that fair value gap, boom, there's a fair value gap, the price trades to that value. Okay, there is no boom because the markets are closing, and now it's Sunday, at 1 p.m. they have to close. Okay, so there is certain time when that happens. So we'll see that when it happens and we'll discuss everything in detail. Okay, so that's all for now. I think we should meet tomorrow again at the same time, that is 1700 GMT, and we'll discuss more about how we are going to go in the next week and this week. Till then, bye bye, take care, and if you have any questions, feel free to ask me that in the chat box. If you don't find it in the chat box, you can possibly ask them when the video is published in the comment section. Okay, bye bye, take care.